Hello everyone, welcome to the Ichimoku daily analysis for gold for Wednesday, September the 15th, 2010. Well, a red-bodied candle today, and as we expected, the market that was trading at extremes on the previous day needed to have a rest, and that's exactly what's happened in this market. We have a change of character for this market. Previously we had a very large green-bodied candle with the bulls in the ascendancy, and the market quite volatile and trading to new highs. Today we've had a red-bodied candle. Now the red body means that the sellers have made some net bearish progress on the day between the open and the close. Now when we look at that in context of this very large green-bodied candle, it is not terribly significant. If we had a much smaller bodied candle previously, then it may be significant, but in terms of the short-term dynamics on the previous day, it's not terribly significant. There is potential for a change of trend to the downside, but the amount of bearishness that we had in this market compared to the bullishness the previous day is only very slight. So still at the moment, the short-term dynamics are favoring the bulls. Now, interestingly, we have this shadow on the bottom of the body of the candle, and that represents buying coming in. So we had the market trading down throughout the day with the sellers attempting to take control, but they failed to close the market down around those levels and only closed the market around the midpoint level. The sellers have lost commitment. So that shadow on the bottom shows that the sellers lost commitment through the trading day. Now that's not the sort of day that you want to see if you're looking for a potential change of trend or a potential sell-off after an extreme day. It is the type of day that you would probably expect to see after extremes where the market is just having a bit of a rest. Now with the market closing with the market closing between the high and the low, between the range, it tells us, however, that neither side took control of this market. So with the bears failing to take control, we also note that the bulls failed to take control of this market. So neither side showed any real commitment to taking this market higher or lower, which is probably what we'd expect for a market that was trading at an extreme as we had previously. Now the market is trading up above the cloud, so we do have a bullish market in big picture terms. The market is looking a little bit overextended here. It is trading a long way above the cloud, so there is some potential for the market to retrace back towards this area. Interestingly, if we look at the Kijun-sen and Tenkan-sen, the market is trading above both of these indicators, which means that the market is bullish in the medium-term and fast-term time frame. But both of those indicators have actually turned flat. So when these indicators turn flat, price action tends to be attracted back towards there, especially the Kijun-sen. So there is potential for the market to change trend and trade a little more substantially into the body of this candle. Now, if the market does continue trading off, then we have strong support down around the Tenkan-sen, which is around 1255. So that will offer itself as potential support. Just above there, we have this area around 1260, which is an area of previous resistance, and we can see here on this occasion the market sold off as it tested that area, and on the previous swing high, the market sold off as it tested that area as well. So there is potential for that area to change character and provide support for this market. So we do need to watch that area if the market does sell off. Down below there, we certainly have strong support around the 1240 region, and then down to the Kijun-sen around 1232, and certainly below there. So for the next trading day, we do need to watch the low of the current candle for a potential lower high and lower low, although it's not terribly likely, considering that the sellers have failed to take control of this market. In light of that, we should be watching the high of the current candle, and certainly the high around roughly 1275 for a potential continuation of the trend to the upside and the market making new highs.